the Start Your Own Business podcast.
It's now time to meet our expert, Darren Fell, founder and CEO of Crunch Accounting. Hi there, Darren. Thanks for joining us.
No problem. Great to see you again. I'm very pleased to be here.
So, you often hear this phrase, cash flow is king. Is it possible to overstate the importance of cash flow management?
No, it needs to be overstated, emphasized, and embellished as much as you possibly can, because it's the lifeblood. It's the thing that businesses get into trouble over if they don't monitor and keep themselves like finely tuned to cash. It can run them into the ground. It really can. So you have to overstate it. And as Crunch, we're not just an accountancy software firm. We are an accountancy firm. So we've got a duty of care. So we're regularly pointing out, the failings to keep a close eye on your cash. So it's everything. Even the very biggest businesses will run into trouble if they haven't got a close eye on this.
Yeah, and presumably if you run out of cash, that can be terminal for your business.
Well, it's pretty much the killer, and I think we see it so often out there that somehow the business owners just haven't kept an eye on it. It's so critical to keep an eye on the invoices. Are they being paid on time? You're not you're not spending too much money. You're not overextending yourself, and then they find themselves in what we think is a sin in business is to not have enough money for their team. And I think that's the worst thing you can do, but it happens so regularly. So, if you're not good at it, really do get a great bookkeeper in,
Yeah.
and an accounts receivable person, like, just to make sure all the invoices are being paid on time, and you're talking to the customers all the time. But yeah, it is literally the lifeblood of the business, and if you don't have the handle on it, you will run into the ground. And sometimes that's an unrecoverable situation. You could have not paid your team, or you have to go out talking to the team and say, "I'm so sorry, I'll pay you at the end of the week." You lose fantastic team members. You might turn it into a situation where all key suppliers turn around and say, "Well, we're not going to give you credit anymore. We want cash in advance for the products," which again is an absolute killer for businesses. So yeah, it is a terminal situation to not accurately monitor your cash flow, and it's easy to do as well.
So, in your experience, where do businesses go wrong when it comes to cash flow management?
Where do they go wrong? They don't monitor it at all. I think is the fundamental. I mean, it's relatively simple, and in fact, in almost every piece of accounting software, you can see what's going on. You will have a cash flow system, a tab to actually show you what's going on. So as long as it's being kept up to date, all of the invoices coming in, and once the money's received, you can actually start seeing that in your cash flow. All the expenses as they're being paid, you can see it all happen in the cash flow, and you see the net result. And if you do this avidly and continually, you can spot the holds ahead of you, and if you need to chase invoices. There's some invoices that are lagging. It's a client that always tries to pay you on 90 or 120 days.
Yeah.
You know where to chase, and where you can actually play with certain suppliers who are bigger and more accepting. If you go pleading to them, like, "Do you mind if I pay you on 62 days here, or if I pay you next week?" And when you say you do that, you're going to have to do it on that time. Otherwise, again, they lose trust.
Yeah.
But again, it doesn't have to be accounting software. It could be a spreadsheet.
Yeah.
Right at the top, money coming in, cash in the bank now, all of the expenses and the invoices you're expecting to come in that month, and the resultant money, and the bottom of the spreadsheet,
Yeah.
and keep tracking that. I mean, when I set up Crunch, there was no VC, there was no PE, private equity. It was just my money, and I remember starting off with all the experience from my first business, which was Pure 360, and I had that simple spreadsheet. I was even fastidious of putting postage stamps on there and silly little things, but it made me feel better about it because I knew exactly the cash position of the business, how much cash I had, and I had enough to pay, all the early team members that we brought on board.
Yeah. So I was going to be the next question I was going to ask you. So presumably in your business, you create cash flow forecasts.
We certainly do. I mean, funnily enough, actually, for the mainstay of the client base, the freelancers and the contractors, there's often a lot of income that is quite regular. It's regular clients. The expenses aren't too vast either. There's just their salary. They're not buying lots of materials. They're selling their time, their services. So often they don't need to do extensive cash flow management, because the system will just show you the resultant position,
Yeah.
which is almost doing a cash flow for you. But if it's the more complicated businesses, and for years and years and years, we were just in freelancing and contracting, and really we didn't need to do that bit, as I said. But I always wanted to do the bigger businesses, because as some of the businesses grew, we had to say goodbye to them
Yeah.
because we didn't deal with it. So now we have a premium plus area, and that goes all the way up to 10 million turnover businesses. And cash flow in there is obviously key, and a lot of them are e-commerce businesses, so they're buying stacks of stock,
Yeah.
and they have to make sure the receipts from the sales channels are coming in correctly.
Yeah.
Otherwise, again, they're in a dire position. They can't buy more stock. Amazon, if that's the channel that they're using, will drop it, from the first searches, and again, they're in a terrible position.
So how common are cash flow problems? Would you say most businesses will experience them at some time or other?
I would say every single business out there has been through some cash crisis at some point, particularly in the early years.
Yeah.
Because it is just so commonplace. You've put yourself into the mindset of the person running it, and they're in founder mode. They're running around like headless chicken, and unless they're a finance person, they are not keeping a close attention to this, and that's why I always say surround yourself with other brilliant people that are better in other areas than you. If you're not very good at finance,
Yeah.
get a lovely bookkeeper in.
Yeah.
Get a piece of software in, and just surround yourself with these fantastic people. So the reason why I set up Crunch is I had problems with accountants. I would have said then I wasn't very good with numbers, but I think I'm certainly better now. I'm not an accountant, so surround yourself with those brilliant people. But you still see it today. Even the biggest PLCs will do it. They will have put together very creative accounting. There will be a lot of non-cash elements flowing through their balance sheet, and they will run into trouble themselves. So even the very biggest businesses will run into this problem. So it is widespread, it's common, and it's probably the number one killer of businesses out there is the mismanagement of cash flow, not paying it attention. And it's so easy to do, especially if you think all the sales are coming in, but you
Yeah.
haven't checked as to whether people are adhering to your 30-day terms, or are they actually paying on time, or do you have someone chasing that for you? So
Yeah.
it is. I would say it's probably the number one killer out there.
Yeah. Well, you talked about businesses in the early stage when founders are kind of tied up in all the other things that you have to do when you're getting your business off the ground. Do you think that's when businesses are probably at most risk of having cash flow problems, when they haven't got a sales flow, set up, and they haven't got regular sales coming in? It's kind of riskier point for businesses?
Yeah, absolutely. I mean, that's the obvious point where it's the most risky. But you just have to, if the sales are light, you have to keep your expenditure incredibly light. You have to, at that point, pay yourself as a founder next to nothing if you can afford to do that. And you just keep working on the sales pipeline, and that's often my advice. All the seminars that I've stood up and done. Buy yourself a cheap little CRM system. Get your contacts in there. The black book comes out. Keep selling. Build up that sales pipeline, and keep the money coming in. Make sure there's a big chunky pipeline there.
Yeah.
What a lot of our customers can do, or service-based businesses can do, is get so consumed by this project they're on, enjoying it, loving it, producing a fantastic job, they forget to still be the salesperson.
Yeah.
And they forget to keep the calls going out, the pipeline bubbling away, and make sure that cash is always going to come in.
Yeah. Another piece of advice that's come up in many of our episodes is the whole concept really of bootstrapping your business and not spending more money than you need to, more than
Yeah.
you can afford to service.
Yeah, no, absolutely. I mean, it's kind of obvious that you shouldn't do that. So you've got to penny pinch your way all the way through. Don't have an office. You can now work from home easily. The
Yeah.
tech is amazing. The internet is amazing. If you look at, many years ago, to set up a business was so much harder. But now, the costs have escalated. The cost of employment has escalated. But we can do clever things. I mean, I'm a real advocate for keeping teams and manufacturing in the UK. But to start it off more cost effectively, if you do need other team members, you can go abroad and get people helping you, like a virtual assistant. I mean, even down to that, talking to Sophia, who booked all this great call in with you, is a virtual assistant. Like, take as much as you can off of you, so you can focus on really running the business where it counts. And if you're the salesperson founder, which often all founders are, just keep selling and keep the cash coming in, and don't get consumed by a project and then suddenly come out the other end and go, I've run out of money.
Yeah. So let's assume I've been listening to this podcast and I've heard your advice and I'm starting my own business and I think, right, I better listen to Darren. I'm going to set up an initial cash flow forecast for my business. How long should that forecast cover?
Well, I think if you say it can cover 12 months, then to get that right, you'd be an absolute genius. And no business would have that right. But it depends how fastidious you are on budgeting. Certainly the bigger businesses will hold each department to account. And if you break that budget and you don't bring in the targets on the sales, then they've got a really good idea where they're at. But for a small business, you just run it on a 3-monthly basis that you can see exactly where it's coming. I mean, of course you'll run it to the 6 months and the 12 months. But as long as you've got a really close eye on this month and certainly across the quarter, you're good. But you've got to keep looking ahead, because then again, there is the black holes, the potholes in the cash flow could be month 7, and a lot of service-based businesses. I remember going to do a seminar in Silicon Roundabout, and the seminar was full of agencies, and web agencies or design agencies and PR agencies, and those as our customers, we saw exactly the same thing. Lots of fantastic clients, like super big brands they're working on, every team member on there. But they really weren't looking. They hadn't spotted month 7 months off, they were going to have a huge black hole. And some of the ones that we then went to speak to, these weren't our clients, were like, we've had to ask the team to cut their pay by half for the next 2 months. I mean, these are the scenarios. You've got an amazing web agency in Charlotte Street, and you've got the cream of the cream of graphic designers and account managers and account directors, and you're telling these people, of which the job market is perfectly rife out there for them to walk into another job, to take half pay for a couple of months because you haven't spotted it. So that's I think that's the I don't know whether I'm doing a good job of being succinct here, but run it across 12 months. And firstly, it's the next quarter ahead. You're doing this on a running basis. The next quarter ahead, you've got to have a fine detail on next 6 months, but don't forget about that forward period, because it will come up and bite you.
Yeah. Should you be looking backwards as well? You get to the end of your quarter, should be looking back and going, well, we forecast we would be making this many sales, and we forecast that this money would be coming in. Should you be looking back as well to learn lessons so that you can adjust the forecast going forward?
I don't see why not. I mean, if you're over selling, then you can increase the budgets, and hopefully at that point you've hired a sales manager, you've got some salespeople, and that's the never-ending treadmill of a lovely sales team. That targets will rise, and that's completely fair enough. They get paid what they bring in, but I think it's a great idea. I mean, when a bigger business forecasts for the next year and prepares budgets, we're looking at the whole flow of last year anyway. So you definitely are using it. And you can see your seasonal trends as well.
Yeah.
And in an accounting firm, of course, we have a January high point for the self-assessment and sole traders, and there's some other seasonal highs, and very seasonal lows where people really, quite frankly, don't want to think about accounting, and they have switched off. So definitely look back. But this cash flow is very much a future forward-looking position, and to really, really know it inside out. And I think, so no, it's hard to convey. I mean, as I say, I'm not your ultimate figures person, and some people absolutely love numbers. But I can honestly say, and what I encourage people to do, if they start running just even the simplest of spreadsheet, or if you have the accounting software, keeping up to date actually kind of feels good and satisfying when you see money coming in and you know exactly where you're at, and you look at the bank account and you've pressed the reconcile button and it's beautifully reconciled.
Yeah.
It feels good. There's almost a gamification in running the cash flow, because you can see what's going on. It is literally your business.
Yeah. So I'm starting a brand new business and I've got no figures to base it on. What advice would you give to people who are starting from scratch in terms of making a realistic forecast?
Yeah, well, I think you've got to have some finger in the air moments to say, what do I think I can sell? They will always be over ambitious, so like probably half that. What do you really need to live on? The absolute minimum. Where can you exist in? Can you live in a cafe, and have no office expenses? You don't need to go for a beautiful WeWork, co-working center, which we'd all love to be in, but they're kind of expensive. And go to the absolute bare minimum on that, and just put the numbers out on a spreadsheet and see exactly where you're at that point and how it looks. Can you do that? Can you live? And then it's about the focus of your time, like I was saying, as quickly as you possibly can, with virtual resources, to surround yourself with experts, so you don't have to think about the things that you shouldn't be thinking about, and just focus on the sales. The founder should always be out there selling first to actually get the thing in. And you might actually surprise yourself that you start doubling or tripling your already quite conservative forecast, and then you've got an idea on what you can put in expenses. Can I now afford a bookkeeper so I don't have to worry about that part? Can I now afford to have a virtual assistant so I get all my appointments booked? So I just wake up in the morning and a beautiful thing, and I go, oh, I've got a lovely call with Fiona today, or I've got, you know what I mean? I'm going to go here. I'm going to go to Covent Garden to meet this customer that I want to go to, and it's all organised with you. So, that's just like absolute basics, and halve it, go really low, lowest on expenses, very low on the sales. Can I do it? And then it's, the other thing I always go on about to people is momentum. Just start, map it all out, map the basics out, just start, and you learn and tune as you go.
Yeah. So to reiterate then, really, you need a reliable cash flow forecast, and you need reliable cost figures and sales figures. Otherwise, you're kind of stitching yourself up if you're, like you say, working with pie in the sky figures and you're overestimating.
Yeah, no, absolutely. Yep.
So what advice would you give to someone who's new about predicting sales? You said always estimate low. Have you got any other tips that you can suggest to listeners on estimating sales figures?
It's super difficult, isn't it? It depends what you're selling. If you're selling, say for example, in a co-working center near me, Adam has got an e-commerce business, but he's been doing e-commerce for years. He's been an Amazon seller for years, and I spoke to him, in, I think it was December time, and I mean, what's your sales like at the moment? He's going, oh, we're only doing 400 a day. 400. I mean, that is utterly amazing. I didn't realize you would get to those sort of levels. So I think it's a test of time to start estimating these things. All you can do is you just guesstimate thing, and you just have to get out there and start doing it. I mean, in the days of Pure 360, I was selling an email marketing anti-spam solution, and getting out there, and first of all, thought that I had to go face to face. That was the olden days, face to
Yeah.
face to all these meetings around London. I was exhausted. I was fitted in 5 meetings a day. And then my business angel went, Darren, you can do this on the phone. No, I can't. I have to see people face to face. And I went, I'm sure I want to see people face. No, you don't need to do it, Darren. You can demo it online and you can send them a quote online. I went, can I? So we tried that and it transformed everything. So
Yeah.
in the little rented bungalow just north of the Brighton station, I bought a whiteboard and I put the day's tallies up there, and again that felt good as I
Yeah.
started winning sales. I was filling out this. So I had no idea at the beginning how many email marketing packages I could sell, because I didn't know how much volume they would have. I didn't know how many users they would have, because that was the variables in the pricing model. Didn't know how many different brands they would need. So they need different profiles, which all cost a little bit per month. But it's just a case of like, you've got to, I would try and go, well, I think I could shift one. I mean, it might be a really high value product. It
Yeah.
might be you're a photographer and it's weddings. And what are you picking those up in? Once a fortnight? And then you've got to plug in the dates. It depends what it could be, but it could be an Amazon seller. And like, the example with Adam, you're selling, hundreds or
Yeah.
probably thousands of little knacks, or in his case,
Yep.
festive things, like balls and fairy lights and stuff like that.
Yeah. So on to budgeting.
Sure.
What do we mean when we say set a budget?
Set a budget is exactly all the things we've been talking about. It's just a different word for it. So I'm going to say from my cash flow that my budget for employment, if I have no departments, generally my budget is I've got 12K a month for that. I'm going to say my rent and utilities is going to cost me 2.5 grand, say. So it's a very simple. So you start off being quite wide and generic with the budgeting. And then as you get bigger and bigger, you can go departmental,
Yeah.
and then you're going on the channels. So yeah, it can get as complicated as you want or as simple as you want. But as long as it makes sense to you, the business, the bookkeeper, and the accountant, then you're winning.
Yeah, that's what's going to be my next question, is like, who do you need to involve in that process? When you're creating a budget.
I think the ultimate person you'd want to involve is, and it depends. Today, it's a little different. Accounting software, certainly in our case, is designed for the end user. It's not designed for the accountant. So you can start mapping out everything yourself, and it's pretty intuitive. But if you're one of the sort of people and it's already starting to scale, there is nothing like having a bookkeeper, with you, comes in, say, 1 day a week, or
Yeah.
you pop for a coffee once a month if it's only a small concern, and you can chat to them on video. And they're the ultimate person, because they may want to, it's called coding it up. They may want to, lay it out in a certain way, because everything, say in the old-fashioned Sage, and I'm sure it is in the new one, will have a code for a different code for different things, a different
Yeah.
code for utilities, a different code for postage stamps.
Yeah.
But yeah, that's often a great point. If you're putting together something that's going to scale, I always talk about not only surrounding yourself with brilliant people in your team, surround yourself with other, whether you call them board members or your leadership team members. And if it's right at the beginning of a startup, we're going to take this mission on, then you need to surround yourself with truly brilliant people who are of the level, who could probably be sitting on the board later. And my instinctive first thing is to surround myself with a very good operational person and a very good finance person. And if you're coming in at that level, the finance person, you will map out all the forecasts, over a 5-year period, because it's a bigger startup. You're going to achieve X mission. You're going to write this software for that, and you will need to raise X amount of money. So all the budgeting and the forecasting would have been effectively done. And this is very much pie in the sky, but it's very plausibly put together. So an investor will say, I believe you. I believe you can hit those targets. And I understand you've really, really thought about your expenses. You've not just willy-nilly put, we're going to leave 100K for staff. We're going to leave 100K for the, and that's just rubbish. So depending on the level, like no money, accounting software, download something to help you on the budgeting, like a tiny bit of money, bookkeeper locally, or accounting software, and start doing it yourself. Going after some big startup, finance man next to you, operational person, man or woman, I'm not being sexist there, and all these people around you to take on the various facets, and the founder gets out and is often the main salesperson advocating and selling the product, or schmoozing continually investors because the business needs to be fed with a lot of money. So finance person, those are my go-to people always when I put the business together. Operations director and finance person next to me has to be, because I need that support around me.
Yeah. So that's a real stop tour there of cash flow and budgeting. Can you boil down from all of that your top 3 tips for a small business who wants to do their first cash flow forecast?
Right. Well, so boil it all down. So the first ever cash flow forecast is, what expenses have you got? What are you selling? And what is what is the amount you're going to sell that product or service for? And then just map out the spreadsheet and start looking at the absolute basics. This money coming in, how long will the sales cycle take typically to get in a spreadsheet? Like, is it in month 2 after you start selling? What's the sales cycle? Where do I need my expenses? Do the suppliers give me credit? Is it 30 days? Is it 60 days? And put that puzzle together. Sit down for hours or days and put that whole puzzle together. How does this all work out? And if you're diligent enough about that, the cash flow appears in front of you once you've worked it out. And this is a lovely exercise that my wife is going through right now. She's we brought up 2 lovely boys, they're 10 and 5 now. It's been challenging, its own way. Claire is a top interior designer, and she would love to create a sunglasses brand with something else that I'm not allowed to mention. And she's right at that point now where, like, how much do these items cost to manufacture? So, like, here's some Chinese factories that do sunglasses. What are the costs? Let's get samples. What's the shipping? What's the duty on this? How are you going to sell it? What's Amazon's cost on this? And it becomes a real detective job to start piecing this thing together. But once you have, it feels amazing because your business is on a spreadsheet. And that's how it works. And if it doesn't work, you can see it's not going to make much money. Then it needs more volume or it needs more margin. The product needs to be slightly higher. So there's a whole other podcast on pricing strategies. But it's go detective on this. Start putting it in a spreadsheet. And if you're really uncomfortable there, get someone alongside you who does this naturally.
Yeah, brilliant. That's fantastic. Before I let you go, can you tell listeners where they can find you and connect with you online, please?
No problem at all. So I set up crunch.co.uk. That's it's in crunching an apple and number crunching, of course. So that's where the main site is. And I am, as you can probably tell, ever overexcited. I'm 15 years into Crunch. And I absolutely delight in people creating businesses for themselves, creating the lives they want. And I hate, because I was there, I hate the poor people that are stuck in corporates that dread, that dread on Sunday night and having to go to the office, and they hate it and they feel stuck there. So I've put together a YouTube channel, which is called Count on Crunch. Make money your way, Crunch, make money your way, and you'll find it under the handle Count on Crunch. And I'm putting endless accountancy and tax tips on there, everything from crypto to cash flow that we've just spoken about. And I'm interviewing people that have created amazing businesses who didn't think they could do it,
Yeah.
but they've created a babysitting business in the slopes of Val d'Isere, and also in the summer for the rich people in their villas in Mallorca. People have created portfolio career businesses, a whole training camp and membership community, you name it, electricians, plumbers. So we're interviewing all these amazing people, mechanics, and that how they've done it, and all the things, all the learnings that can be passed back to the users. So I'd love it if people go to our YouTube channel and tippity tappy on the comments and like, what do you want to find out about? What don't you understand? Do you understand what the hell's going on with MTD, making tax digital? What's this
Yes.
it's a thing? Like this horrible stuff. Like, and that's, as you can see. So I'm speaking to you from my little guest room in our house, much to Claire's like unhappiness that she's lost her guest bedroom. And I've created through lots of Amazon vouchers and various things, a little YouTube studio so I can record between my CEO role and help people. So yeah, it's count on Crunch, or Crunch, make money your way.
Excellent. We'll make sure we add all of that to the summary notes. But thank you
Thank
so
you.
much for your time today. It's been great fun and a real eye-opener, and loads of insights there that I'm sure our listeners will find really useful. So thank you.
Yeah, no problem at all. And hope to see you again soon.
Yes, lovely. Cheers.
Okay. Cheers then. Bye-bye.